Well, hi, everybody. I'm Rick Edelman. Thanks for joining us, our very first webinar of 2026. I'm really glad you're here with us. We've got a lot of great events coming up throughout the year, and we're going to start with this one, which is focusing on the ultra high net worth and family offices, both those of you who happen to be operating or are one of those accredited investors or operating an FO, or you're a financial advisor serving that marketplace. This is a really fascinating conversation that's going to be really of great value and help to you. And helping us have this conversation is Jake Claver. He is the CEO and principal of Digital Ascension Group. Jake, great to have you with us here today.
Absolutely. Appreciate you having me.
I'm willing to bet that you are not familiar with Jake or his firm. Jake's been in this business quite a long time and focusing on the ultra high net worth and family office marketplace. He's written the best-selling book Wealth in Numbers. Jake, tell us a little bit about the company.
Yeah. So we are a multifamily office that specializes in crypto. Do all the private client services that you'd expect for a multifamily office, estate planning, tax planning, you know, um, wealth management, insurance, all those things, but specific to digital assets or what most people refer to as crypto.
And while you're delivering a lot of those services directly to the ultra high net worth and to family offices, you also serve advisors who are serving that marketplace.
We do.
So elaborate on that a little bit.
Yeah. So, we originally started consulting for some family offices, and it's really kind of a value add, right? Because many of them already have traditional advisors that understand the majority of their portfolio, where their allocations are, how they're going to rebalance the investment thesis for the family, the long term vision, risk tolerance. And so we come alongside those advisors and we provide the expertise in this domain, which most of them have stayed away from just for regulatory reasons or because it was above the risk threshold that they were comfortable with. We do that in a very institutional way. And so that's why I think we've seen a lot of the success that we have. And, we're just here to add value. So how we work with other RIAs is we become a sub advisor for them. We are an SEC registered RIA. We have about a billion in AUM, and all of that is crypto up to this point. So um, really, I think that's the value add that we can bring other advisors is, you may have clients that are crypto curious or are already holding digital assets and they want a way to secure that, have succession planning, build those things around it, mitigate taxes, and structure things in a way that it's outside their personal estate, which is, something that we find with a lot of people is they just bought this in their personal name because they didn't really have another way to do it through their trust or their company or some of the other structures that they may have for traditional assets. And we help them, move that in there and then also set up the accounts that would be appropriate to manage that with the advisor that they are already working with.
So what I'm finding fascinating about this, and before I get into that, let me just mention as a housekeeping note for everybody, many of you have sent questions in advance when you registered for today's webinar. I'll be hitting Jake with those as we go. You also have the opportunity to type in questions. Go to the Q&A box here in Zoom. I'll be taking a look at that as we go and tossing those to Jake as part of the conversation as well. Um, One of the things I find fascinating, Jake, about this is that you're very far ahead of most advisors in terms of your crypto knowledge, experience, engagement. The fact you're essentially a crypto only RIA, and what the really message here is for advisors who recognize that we can't ignore crypto anymore. We kind of recognize that it's here to stay. It's not a fad. It's not a fraud. The government's not going to shut it down. Clients are increasingly curious about it, increasingly owning it. The new Bitwise survey came out this week showing that a third of investors now own Bitcoin,
Mhm.
which is a radical increase from just 1 year ago. It's like a
Yes.
50% increase. And so advisors, I think, are increasingly finding themselves feeling that they're behind the curve, that they're slow to adopt. They're not really sure how to catch up. They really don't want to spend a whole lot of time with this. It's just another asset class. They're busy running their practice, et cetera. And what you're really saying you're offering here, if I understand this right, is that you're a resource that allows the advisor to outsource this function so that they can give their client the access to crypto without having to frankly waste a whole lot of time or spend a whole lot of effort to get up to speed on it themselves.
Yeah, that's exactly right.
So talk about, I mean, the fact that you do focus on the ultra high net worth and on family offices. Talk about the main thing that that audience, that group of clients really needs to focus on that you feel that they're missing.
Well, so many of them have stayed away from crypto because they see it as sketchy or speculative, which it still is to for the most part. There will be an adoption curve where these protocols and networks are used very similar to the internet. I'm sure many people that are watching this and yourself were around for the dot-com boom, where people speculated on anything that had .com at the end of it. Many companies went public that had .com at the end of it that ended up being a sham or a fraud, or just no real tangible value for the business model that they were trying to get to market. The same will be true for crypto. I think that there'll be a watershed moment where we probably see, we have 50 or 60,000 different cryptos today. Um, it'll be whittled down to, I think, 3 to 5 really core networks that are used over the long term. And then maybe broadly, there'll be niche use cases for another, call it 75 or 80 networks. I think it'll be less than a total of 100 different crypto projects or networks or protocols that are what's used on over the long term or duration, or adopted. And so picking those is very difficult. You're picking a needle out of a haystack. There, like I said, there's 50 or 60,000 of these. And there's obviously, Bitcoin, everybody knows that's the poster child. It's the marketing. When we have conversations with high net worth individuals or family offices, it's going to be around risk tolerance and how this is an inversely correlated asset class to their other traditional assets. We really look at it as a way to mitigate risk, and we understand how to position clients effectively for that purpose versus a lot of other family offices that we've had conversations with look at it as early stage venture, and that's kind of the risk curve that they see it on, a way out on the end of it. I think if you are working with competent people that have studied the industry and understand what this technology is, you can look at it through a much different lens. I personally have almost all of my net worth in digital assets, and I'm siloed in two because those are the two I'm sure on, right? Like most people would look at that and say, you're not diversified. You should be, preserving your wealth. I would agree with that to an extent. But Warren Buffett also says diversification is a hedge against ignorance. And if you're ignorant, then you probably should be diversified in crypto. You probably should have somewhere between 5 and 10 positions in large market cap cryptos that you think have an opportunity over the long term. And we do that for the majority of our clients. Almost all of our clients are diversified. I would say that they're heavily weighted in a few positions. And then we provide tangential benefit around those assets where they can generate additional cash flows, draw down lines of credit, show it on their balance sheet to purchase, a home or mortgage. We hold it in a way that, most people holding it on your cold wallet. Um, it's just a lot of liability and risk associated with that. So that's why many families come to us also is just a security component. And it fits really nice with the rest of their, assets and the way that they're managed.
Do you want to disclose the two that you own?
Sure. Yeah. So full disclosure, the majority of my net worth is in XRP. And then I bought a little bit of HASH, earlier this year. Those are the only two that I own.
And so I'm willing to bet that most people listening would have assumed that you would have said Bitcoin and Ethereum, the two largest. Between the two of them, they control what, 85% of the market cap in crypto. So talk about why you chose Hash and XRP, Ripple, as opposed to the big known brands of Bitcoin and Ethereum.
Yeah. Well, one, I'm here for ROI. Versus the other ones have already seen their adoption curve. There's a lot of people that have already seen Bitcoin, got in early, done really well. Ethereum, seeing what it did, got in early, did well. Um, and both of those, are established blue chips in the space. I don't think they're going anywhere. They are, in my mind, more of a Alta Vista or a Napster to Google or Spotify. Okay. Early stage, first movers, large amounts of adoption, disruption in the space. But over the duration, I believe that there are going to be other networks that are adopted at scale and actually surpass those in market cap. Total today for crypto is around $3 trillion. We're, you know, 1/5 of gold for the total asset class. And that doesn't even mean that there's $3 trillion worth of liquidity in it. It's far less than that for what's actually liquid and can be moved around. So all that to say, we're still very early. And with that, Bitcoin, the first block was mined 17 years ago on January 3rd. We just had that passed the other day. It's been around a long time, but we still haven't seen, the regulation around this. And I do think here in 2026, there's an opportunity for a Cambrian explosion. And there'll be certain applications for these assets where they're used at scale and see large amounts of liquidity move into them in order to be able to facilitate the value transfer that they're actually meant to be used for. Like the whole point of developing these protocols and the tokens themselves were so that they would be used. And supply and demand dynamics, when those things play out and that stuff is implemented, I think will drive XRP's price substantially higher. And it would end up being likely the number one market cap and most used token over the long term. And that's my thesis. Again, I'm just one guy. There's a lot of people out there that I hold in high regard that would disagree with that statement. And so that's why, we encourage all of our clients to do their own research, but we do provide our expertise to our clients and what we see in the market and how it's going to play out and how things will be adopted. Hash, the reason that I put money in that, so full transparency, I made a large amount of money in crypto in 20 and 21. And some of the same characteristics on a few of the tokens that I got in early are very similar to Hash. So it's not listed on major exchanges. You wouldn't be able to hold it in institutional custody. You would have to hold it on an exchange or a cold wallet. And it's not listed very many places. So the liquidity in it's low. But the people that are using the network, Figure Markets, you guys may know who that is. They just went public here in late 2025. I know Mike Cagney, I've had him on podcast. They're rolling up mortgage-backed securities, and they're doing it on-chain, on Provenance. There's also about $450 million worth of whole life insurance that's been tokenized on Provenance. Provenance's native token is Hash. And so in my mind, all right, these are real-world applications that are driving value and demand for this network and the token. And so, and that token is going to be used to facilitate value transfer on the network. All those things culminate to me thinking, all right, this is worth taking a position in while it's less than 3 pennies. And if it works out some of the way that, some of the stuff did for me in 20 and 21, it'll be very lucrative. But that's about, 1% of my portfolio. 99% of my portfolio is XRP.
And when you advise clients, are you advising them to do the same 99.1 with those
No.
two?
So
So talk about the recommendations you're giving clients.
yeah, so full transparency, I am not a financial advisor. I'm not licensed. I don't hold a 65, 66, 763, any of the stuff that the majority of the people that will watch this do. Um, I can talk about my personal portfolio and I do that publicly. But again, I encourage other people to work with a wealth manager that is going to assess their risk tolerance, look at a diversified portfolio, how to hedge risk with uncorrelated bets. We put together a hedge fund. We got about $400 million in the hedge fund, and it does all those things, right? And I participate in the hedge fund, but I do it through um, using the XRP that I have as the collateral that then is used to make, the capital call and get the access to the fund. So we actually allow you to kind of have your cake and eat it too. The way that we've structured things is you're able to put up your Bitcoin or your XRP as a capital asset. And then we reflect that value off exchange, get a line of margin against it. And that's what's traded in the hedge fund to be able to generate cash returns or compound the returns on the asset to aggregate more of it over time. So, a little bit more complex financial products and structuring, but there's a lot of people that believe in an asset that they've bought, whether that's Bitcoin, ETH, Solana, Matic, Chainlink, XRP. We really are kind of agnostic there, and we build products and solutions that provide additional value to just, what most people are doing, which is just holding the token.
And what percentage of a typical client who's ultra high net worth or a family office, what percentage of that portfolio are they typically putting into crypto?
It's mostly second or third gen that are coming to us and having a conversation. Most patriarchs or matriarchs are a bit skeptical, again, of the asset class itself. And so, we've got a large social media presence and people will reach out and have a conversation. Um, most family offices that we've worked with, somewhere between 1 and 5 million is the normal ticket size. And that could be, up to 5% of their total portfolio. And it could be, far less than 1%. But that tends to be the amount that we're seeing most people start to dabble with, as far as family offices. And then high net worth individuals, again, probably same ratio, 1 to 5% of their total portfolio. They're looking to make an allocation to this, just again as kind of a hedge to some of the other assets that they think might fall in the short term. Stocks are at an all time high. You've got gold and silver, that are on a rip here, and we haven't seen crypto really ride that wave like those have. So as things kind of move and maybe there's some downside in those assets, I think that there's going to be some appreciation in crypto. And so, um, trying to help people position themselves effectively to mitigate those losses and get the upside.
So when you encounter these prospective clients, they've reached out to you from exposure to you and your various social media and education marketing channels, et cetera. Is that talk about their attitude? Are these folks already owning and they're looking for help, or they are curious and looking to enter for the first time?
I would say about 90% of them already own crypto, and they're looking for assurances and safety to be able to have some succession planning or continuity for the assets over the duration that, the family plans to hold them.
And when you say safety, are you referring to market risk or are you referring to literal cybersecurity, meaning I don't want to lose my wallet or my private key, et cetera?
The latter there.
Mhm.
So, many people they're defrauded in crypto. Their wallet is hacked. They hold it in a hot wallet like Atomic or Exodus, and it gets hacked. They have it in a smart contract, and somebody is a malicious player there. There's a lot of exposure in crypto just with the way that the ecosystem works today and how people hold the assets that could cause them to lose them.
So, all right, I want to focus on this because this is really important for the advisors who are watching this and the individual investors themselves. So, a series of questions I want to ask you, Jake. First, why is it that someone would own digital assets in a method that exposes them to that risk? Why didn't they just buy a Bitcoin ETF? Why do they have a cold wallet or a decentralized account?
Well, so ETFs are a new product, right? They were launched at the beginning of 2024. I think January 10th, 2024 was when the
Mhm.
Bitcoin ETFs finally were approved. The futures market had been around since 2017, which was actually what caused the top in Bitcoin in early 2018. But all that being said, they really just haven't been around that long. And many people have already adopted that exposure right now. Like you mentioned, there's 1 in 3 investors are holding Bitcoin through some means. The bearer asset is very similar to the mindset around people that people have around gold. Paper contracts or derivatives. People have become aware that there might be some manipulation there, and so a lot of people are flocking to the physical metal. The way that I could equate what people do with crypto to traditional finance would be like you work with your broker at Schwab or Fidelity, and this actually used to be the case a long time ago, but obviously it's antiquated when we moved to digital systems, but you used to get a physical stock certificate,
Yeah.
and you might take it home and put it in your safe.
I mean, not just might. When I got started, because I'm an old fart, when I got started this business, it was routine for people to hold physical certificates. And the notion of allowing your broker to hold your certificates for you, which we know it today as street name, I remember clients saying, "Are you nuts? I'm not giving you my securities. They're in my drawer in my bedroom or in the safe deposit box." The notion of letting you hold it, that was crazy.
Well, and so that's where we're at with crypto today. Many people feel they have that ownership over that bearer asset, that they have that security of holding that thing,
Right.
and they want that. But it doesn't come with the insurance and the assurances and continuity planning that you would get from an institutional account at a Schwab or Fidelity like it exists for your stocks today.
Right. So that's why I really want to highlight this because uh, my point is this, for the advisors who are watching us. In my experience, and we survey advisors all the time, and in our research and our anecdotal conversations with advisors around the country at events, we discover that most advisors have never even asked their clients if they own crypto in any shape or form. And they're in denial. The advisors I've had routinely, advisors say to me, none of my clients own it. And we're like, "You're nuts." Yes, they do.
What?
And we and they've been owning it for years, and they bought it way before the ETFs came out. As you noted, the ETFs have only been around 2 years. And so they bought it in a cumbersome, awkward, complicated, complex, intimidating way because it was the only game in town.
Right.
And now they realize, look at how the value has risen dramatically over the last 5 or 8 years, and I'm worried about cybersecurity. I'm worried about hacker risk. I'm worried about losing my private keys. I'm worried about the estate planning elements, as you described, the succession planning. And they recognize that they now may be overweighted because it's grown so much faster than every other asset. They are on a platform they may not know if they can trust. And there are other alternatives today that didn't exist 5 or 8 years ago, and they don't know what they are. They don't know how best to use them. And that's really the services you're providing. It sounds like that you're able to say,
Well,
look, we can make your crypto ownership experience easier, better, safer, cheaper, more reliable, etc. Um, and that's where I think advisors can be of such tremendous value to their clients. It's got nothing to do with recommending crypto. It's about managing the crypto the client already owns.
right. Well, they've got convictions and they've made the investment on their own volition. They've done their due diligence and research and made the allocation to whatever it was, but it's not protected. It's not structured in a way where, well, I'll give you this is a horror story that we had. So one of our clients that came to us had over $100 million in Bitcoin that the patriarch, well, that had passed away. They hadn't formalized a family office, but he had that much Bitcoin. He had left it to the children in the
What
will.
year was this?
This was just recently here in 2025.
Okay.
And so he had bought Bitcoin very early on, like 2011, 2012, and just let it sit. And it had accumulated a lot of value. And when he passed away, they didn't have the keys or the understanding on how to get to the assets, but it's in the will. So now there's $100 million that's passed through probate to the beneficiaries, and they don't have a way to access it to pay the estate tax on it because it's over the gift tax threshold. So the first 30 million, cool, like that can move on. The other, 76 million that they had received, they need to pay 40% taxes on it. They can't get to the asset to sell it to even cover the taxes. So they had to file bankruptcy.
Couldn't they declare, therefore, that it's a lost asset and not the
It's
current market
it's
value?
it's in their physical estate, and they do have the wallet. They just can't get to the Bitcoin.
Wow.
So
That
still
is
working
harsh.
through that here for the tax bill in 2026. So we're going to try the avenue that you mentioned. But
Yeah.
all of that being said, if they had just had it, in an institutional account with us, not an issue, right? And if they had structured it the right way, we probably could have mitigated those tax implications
Right.
for the transition. So
And there are far too many horror stories like that. I'll share one of my own. This was probably about 3, 4 months ago. I got an email from a consumer. I get them often, and he was looking for some help. The backstory is he went to his financial advisor a year ago and said, "I would like to buy Bitcoin." The advisor said, "Sorry, can't help you." So his client um, went on his own onto the internet and searched financial advisor Bitcoin, found a website, a firm in London that purportedly is a Bitcoin broker, um, transferred to them his IRA account, um, and ultimately concluded, as you can guess, that the whole thing was fraudulent. Um, the guy is 65 years old. The IRA represented almost his entire liquid net worth of $2.6 million, and it's all gone. And not only is it all gone, but because it was an IRA, he's facing the tax liability on the distribution he made to send the money to them, which there is a method for the IRS to avoid the tax on that, at least due to theft. But nevertheless, The guy's life savings at 65 are virtually wiped out, all because his broker said, I can't help you. And that's at the end of the day, the obligation I think we have as fiduciaries is to say to the client, yeah, I will help you. If I can't, I'll at least help you make sure you're not going to be dealing with a fraudulent outfit. And now that the ETFs are in place, there's really no excuse not to help the client. Because as you said, these people are committed. They want to own, they want to engage. And if you don't help them, Lord knows what'll happen to them. And so these kinds of horror stories, unfortunately, are far too common.
Yeah. Our normal client is somewhere between 40 and 75 years old.
That's a pretty broad range.
Well, Gen X and baby boomers.
Yeah, but my point is that, people that's a pretty broad spectrum of the investing public.
For
So,
sure.
so for advisors who say, "My clients are too old," or, "They don't have any interest," or, "It's not suitable for them," I mean, I find it hard to believe that a 75-year-old with millions of dollars, maybe tens or hundreds of millions, to argue that it's inappropriate for them to have low single digits in crypto, that's a silly statement.
I agree.
When you consider that that 75 or 85 or 95-year-old, it's not their money anymore. At this point, they're just the steward of the money for the benefit of their heirs. So shouldn't that 90-year-old be investing the money the way that their 45-year-old grandchildren would want it invested? Because they're the ones who are going to inherit the money anyway.
Right. And we help people do that all the time. And we give them the safe way, an institutional way for that to happen. And again, it works with their entire estate plan. So,
So talk about the relationship when an advisor comes to you and says, "Yeah, I've got a client who wants or has a crypto allocation. It's not my thing, not my expertise." Advisors are routinely outsourcing clients to other professionals. We do it with lawyers and accountants and mortgage
sure.
brokers and real estate agents, and we also do it with money management. We do it with SMAs, we do it with hedge funds and private equity and
Yep.
so on. So this really isn't anything different. If you want a crypto allocation for your client and it's not your thing, you find someone to do it with or for your client. So, talk about the nature of that relationship. When an advisor comes to you and says, I got a client, wants a crypto allocation or has one, how can you and me work together to serve my client? Explain all that.
Yeah. So our custodian's Anchorage, we basically become a sub advisor for that other RIA. We'd be able to fee share on whatever's charged for the AUM fees or whatever, compensation structure you have. And we would set up a managed account inside our instance, that would have, sub accounts for each one of the clients that you would have. We would have oversight on that. You'd have oversight on it. And, at our discretion or however you wanted to do it, if it's a collaboration, we decide, where to appropriate those funds. Um, a lot of the time in that situation, what we've seen is cash come over because again, to your point, somebody that's 65 years old, if they go try to do this themselves, they can run into some problems. So it'd be much better if they could just wire the money over, let their advisor handle it. They work with us. We make sure that it's invested. They're holding the actual assets inside institutional custody. It's insured up to $100 million and they have the allocation. Everybody's happy. And then again, we have additional products on top of that where we can, depending on the risk tolerance, generate additional returns in cash or in kind for whatever asset they choose to appropriate that to.
Is this going to become dominant at some point in the future, do you believe, or will crypto always remain a niche, small allocation in the portfolio?
I think crypto will eat everything else. There will not be any asset class on the planet in 10 years that's not tokenized. And when I say that, that's probably jarring to some people, but you can imagine how the world was before the internet and how much we depend on that today. And that's really all this is. It's a protocol. These are protocols that transfer value and allow for efficient systems to execute. The friction's moving money. Like, let's say you had an international client or you wanted to participate in an international fund and you go send an international wire. It could be 3 to 5 days before it lands in that other account and then it can be appropriated. With crypto, it's instant. You can send millions of dollars for pennies in costs. And it removes all these frictions and the latency for the velocity of money across the globe effectively. It'll galvanize economics. It's going to do a huge number on things. There's going to be a huge wealth transfer and liquidity that moves into a lot of these networks, protocols, and tokens. So all that being said, I think that it will be the dominant asset class a decade from now. I don't think there will be anything that has the market cap of crypto. And that'll be effectively because all of the other assets that you currently manage have been moved on chain to create the efficiencies to be able to manage them more effectively. It'll be ubiquitous. You'll be able to trade in and out of a money market and securities and commodities and crypto and whatever else you want real time, 24/7, 365.
So take all of that, and I agree with everything you just said. Turn that into a single piece of advice that you would give to advisors who are serving the high net worth and family office market.
Um, you want to understand who you're talking to, right? Because again, what I just say there's going to be jarring for some people and difficult for them to comprehend. If they've been through the internet, they've seen that. So a lot of what I use are analogies to stuff that people would have experienced, and they can go, okay, I can see how this transpired over this period of time and why that would take place over this period of time and how this works. So educate yourself and get to the point, if you do want to become proficient with this, um, 10,000 hours in anything, I've spent 6 years learning all this stuff. I dedicate my time and life to it, but otherwise, and same thing you'd probably tell your clients, if you're not going to do that, partner with a professional that has that experience and that track record so that you can make sure you're providing the best value to them.
Well, you mentioned a few minutes ago the notion of succession planning, transference of wealth from one gen down to the next. Talk about the fact that that issue. It's a big focus of a lot of family offices. So, what kind of next gen wealth strategy do family offices need, and are most of them doing it, or do you find a gap there?
For crypto, I find a large gap. For other assets, they're absolutely on top of it. They've structured things in a way through trusts or life insurance where things are going to pass, tax free to their heirs, or mitigate as much tax as they can when that transfer happens. Sometimes you want the step up in basis, right? So you want to keep, a portion of whatever you can in your taxable estate up to 30 million here in 2026 if you're married. Um, but anything beyond that, we've done a lot of work on the philanthropic side as well. So if you do have significantly appreciated assets and you want to get those out of your taxable estate, we can do charitable remainder trust. We structure them that way, and you get some income off of them while you maintain control and kind of appropriate it before it passes to whatever foundation or charity you want to pass the assets to. Um, Life insurance front is we're getting there. The regulation around life insurance for crypto is a bit cumbersome. The US and Canada require that you fund policies in cash. It's difficult to get assets inside of them. We do have PPLI offshore for people that are in other jurisdictions where they can invest in kind into the PPLI policies, and we can manage those using the RIA. Um, but we're working on some solutions here domestically for, like an insurance direct fund, um, or other avenues where people can get access to digital assets inside of insurance policies. Most often on the trust side of things, we see people setting up dynasty trust or asset protection trust, normally domiciled in Wyoming. The reason for Wyoming versus Delaware or Nevada or
Or
even South
Texas,
Dakota.
or yeah, yeah.
Yeah.
Wyoming's the hot state now.
Well, it has the most progressive regulation for digital assets. They were the first to market with the DAO, which is a decentralized autonomous organization. And they're also first to market. They proposed a DUNA, which is a decentralized, unincorporated nonprofit association. So we'll see if that gets passed and how that's going to be used. But all that to say, you get the most freedom to operate in Wyoming with crypto. And then additionally to that, you get strong charging order protection from creditors there in Wyoming, and the anonymity that you would seek, if you went to Delaware. They've adopted that as well. So attorney-client privilege, and with the other regulations, that tends to be the state domestically that we will domicile things in. But we've done estate planning all across the world in the UAE, Dubai, the free zones there, Switzerland, Nevis, the Cook Islands, um, Cyprus, Portugal. We have partners globally. If you do have clients that are abroad or want to move abroad, we can help them set that up. So But yeah, you want to make sure that there's continuity planning and the assets are held appropriately. Most people understand that if they have real estate or stocks or private equity or whatever else they're invested in, they have the structures in place to manage that. But what we found with crypto is, again, because their advisors kind of threw their hands up and said, we don't do that yet, they went and did it on their own because they want the upside and it's in their personal name and it needs to be structured or restructured the right way.
Hmm. You know, what everything you're describing is making me think of that slide we showed earlier. You talk a lot about full circle wealth management.
Mhm.
So expand on that.
Yeah, absolutely. So, we kind of meet people where they are depending on, if they're looking for wealth management or the estate planning. Some people haven't figured out what their mission statement, core values, and principles are. We always do value based planning. So we'll sit down with a client, have a conversation, see what their long term objectives are. And then we try to align all of those other pieces and look at it from a holistic approach. Because all of these things are different tools, right? Many people sell different types of insurance policies or annuities or IULs or whole life. Anybody that's a zealot that says it's one size fits all, I don't tend to agree with. I think there's a lot of really fantastic products and solutions out there, but they're all tools at the end of the day that should be used for specific circumstances and context for each client. And so we look at, again, we set out their holistic planning that's values based, and then depending on what pieces they're missing, we kind of fill the gaps for them. And it builds on itself too. It becomes I call it a family office flywheel, right? So each one of these things, as you move through them, tends to feed the next one. If you're doing wealth management, you're probably going to do wealth planning and tax planning, insurance. You're probably going to look at philanthropy and structuring things there. You probably, want some lifestyle management, like bill pay, all of that. And then when you get enough assets, there might be some infighting between the next gen on who gets to use the assets when, and then you got to go back to corporate governance and family office planning, and then around the wheel it goes. So that's kind of the holistic or full circle wealth management you mentioned.
We're getting a bunch of questions from folks, and this is a fascinating conversation. One of the attendees is asking about how you handle all of this in the context of cybersecurity.
So we're going through a SOC audit right now on a lot of our stuff. We work with a lot of partners, and they hold the data. We have to work with very highly regulated counterparties to make sure that we're mitigating the risk of loss for data for our clients. When it comes to the cybersecurity around the crypto, Anchorage is our custodian, like I mentioned before. So BlackRock holds their assets with Anchorage for their ETFs. There's a reason for that. I could get into the technical nuance of how the backend systems work, and they shard the keys after they've been encrypted and how they hold them across HSMs globally before they're reconstituted to be able to pull assets out. And that's also why they're able to get insurance from Lloyd's of London up to $100 million on each one of the accounts. Um, there's just a lot of things when it comes to how you manage your digital assets and the keys. We do have other clients that still want to keep a portion of their crypto out of our management for their sovereignty reasons. Completely understand that. We help them, walk through best practices there. So, you probably want multiple copies of the keys. You probably want those on metal plates and not paper. You probably want them in multiple locations, and you probably need certain people in your will to have access to those at certain times. Multi-sig is also a big thing. So we have to have 3 to 5 signatures for assets to leave the account at Anchorage. And we can set up governance around how much you can move and who all has to sign, for different thresholds. There's just a lot more nuance in the way that we've structured things versus really everybody else in the market. There's a family office that I talked to at SALT this year, or I guess it was last year in Wyoming, and they've had a large allocation to Bitcoin and ETH for the last 3 years, done really well with that, which was great. Um, but his financial committee has 4 people on it, and they cut the keys. So for those that don't know what a cold wallet is, like, again, you're taking that stock certificate or that crypto off of the exchange and electronically transferring it to a thumb drive. when you create this account on the thumb drive, it'll give you 24 words that you write down. And you can't lose those words, because if you do, you can't regenerate that account.
Called a seed phrase.
Seed phrase, correct. And so, if you can remember those in your head, awesome. Most people can't. They have to write them down somewhere to be able to redo it if they need to. He tore that into, 4 pieces, and each person has 6 of the words. And when they come back together quarterly, they will reconstitute the wallet and then rebalance things if they want to. But that's the only time it gets touched. And they delete the wallet after every interaction, which, if any one of those, and those people are on different continents, like, just seemed really risky to me.
Yeah, I would agree. That's not that strikes me as excessively cumbersome and not necessarily foolproof.
Right. So you want both, right? And that's kind of what we're trying to marry here, is all the benefits that you would get from TradFi with the access to these digital assets, but done in a way that's institutional versus, how everybody else. And the other thing we're looking at, many of you probably have clients that just call you and tell you to make a trade, right? And Bob, his cell phone. He calls you up and he says, "Hey Joe, give me 1,000 shares of Amazon." You say, "Are you sure?" "All right, blocking in the trade. This is the price. Good. Okay, execute." With AI the way it is nowadays,
Right.
people are going to start SIM swapping and spoofing numbers, and then getting enough video footage of somebody to be able to reconstitute their voice. And I am concerned that people are going to start calling advisors and getting them to execute trades or send money places that the client did not want them to go. So we're looking to implement multi-factor authentication and YubiKeys and some other more progressive ways to make sure that the clients are the ones validating the transaction here in 2026.
You mentioned Anchorage Digital, and that raised a question from one of our attendees asking about the risks that are there. Even with Anchorage Digital, is it possible the U.S. government could seize the assets there? Are the assets protected and insured? Talk about, you touched on it a little bit, but elaborate about Anchorage.
Yeah. So Anchorage is a federally chartered bank. They're regulated by the OCC. They were the first bank to ever receive a charter to be able to work with crypto. And that happened in Trump's first term toward the end, before the Biden administration and Operation Choke Point over the last 4 years here. Now that there's bipartisan, support for the asset class, things are obviously changing, and that's great. Now we've seen 5 other charters preemptively issued here just recently at the end of 2025. We got those. So there are some people that are competing, Bitco, Ripple, Paxos, I think Circle, and then there was one other that had their preliminary license issued by the OCC at the end of 25. Anchorage has been the longest standing. They have segregated bankruptcy remote, which is a big piece for crypto, insured accounts. In 22, FTX and Voyager and Celsius and all of that happened. And many people lost billions of dollars. And that's because they weren't bankruptcy remote. Like, that's the one thing that I think traditional finance has gotten absolutely correct versus crypto, is you have brokerage and you have custody, right? BNY Mellon, the custody, they corrected me when I told them this, but I want to say they said $65 trillion. But they manage about 9 trillion, right? And so, you being a fiduciary, you want to segregate that risk. If the counterparty that you're using to be able to execute the trades goes under, which is more frequent in crypto than we would like, you don't want there to be risk that your clients are now a creditor of that platform. With Anchorage, you're never a creditor. It's an FBO account in the client's name. They are the owner of the assets, period. If there were a bankruptcy at Anchorage, which I don't think is going to happen, they've got a very strong balance sheet, close to $700 million currently on it. And I think they're going to IPO at some point in the future. They would then, have to go through the bankruptcy process, but those assets would stay in your client's account until there was another trust bank that took over that, and then they would have access to everything. And, God forbid something happens to us, another RIA can step in and manage the client's assets and set up an account and agreement with Anchorage. So, I kind of look at it like a 3-legged stool. If any one of those legs gets kicked out for whatever reason, the other 2 are still standing to make sure that the clients or their beneficiaries are in control of the assets and taken care of.
Your comments earlier about hash generated a bunch of questions from people. Several, Greg, among others, wants you to repeat the ticker because Greg has noted that there's hash flow, hash coins,
There's a lot of
some
hash.
others. The
Yeah.
others who went and looked. Which hash were you referring to?
It is capital H, capital A, capital S, capital H. It is way down the list. It reminds me of, so I got an XDC when it was 3/100ths of a penny. It went to 9 cents in 2021. Um, and I had to buy Ethereum, send it to a weird cold wallet, swap it to another token, and then I was able to exchange that for XDC, which was an ERC20 token at the time. They then migrated their chain over to their own blockchain, which is an XRC20 token. And you had to like burn this one to mint the new one on the other chain. Very complicated, but same thing with hash. It's a little simpler. Like it's only listed on Figure Markets and Osmosis. Those are the only two exchanges where you can buy it. And when it gets listed on Coinbase or Kraken or Uphold or a lot of these other larger exchanges like Binance, that's when more and more liquidity will flow into it. And there tends to be a lot of upside in the token when that happens. And then once there's enough liquidity in the token, they'll start to be able to use it for more things on the network, and it'll continue to gain traction and have supply and demand dynamics that are favorable.
Dave is asking regarding XRP. What's your view of buying XRP on an exchange versus buying the Bitwise XRP ETF?
Um, I think the ETFs will do exceptionally well. There are a few leveraged ETFs. I think IBIT has one of those, and then there was one more that's been launched. I think those are more for trading, like the regular just spot ETFs. I think that my my guess, we'll see if I'm right or not, is that BlackRock will come in with an XRP ETF at some point in the not too distant future, and I think that that will exacerbate the move there. But with the bearer asset, you don't have to pay fees to counterparties, right? So if you do want to manage this yourself, you wanted to hold it on a cold wallet, there's an option where you could just buy it on an exchange. You're going to pay whatever the cost is for that purchase. We are substantially less for executing trades, by the way, than anybody else. Anchorage is only 20 basis points with no spread. All these other exchanges, they have a spread and a fee. So you're most of the time you're spending somewhere between 2 and 5% of your purchase just on those two things when you buy on an exchange. ETF, you kind of have the advantage there, but you're not going to be holding the underlying asset. You're going to have exposure to it in your portfolio, which is great. Um, I think, for the same reason as gold or some of these other assets, like if you're buying a derivative of gold, it's going to trade at the spot price most of the time. If you're buying the physical asset, you pay a premium over spot. I think that there will be certain digital assets over the long term where it's difficult to obtain them and people will want a premium above and beyond the spot price, and that's where they will trade. So I think that there's greater upside in holding the bearer asset. I think there's more utility and access to products and solutions that'll come to market through DeFi once it's in an institutional setting if you're holding the bearer asset. But again, if you're just looking to have an allocation and get some exposure to the upside, I think the ETFs are a great way to do that.
Yeah, I think you're describing good versus better as opposed to good versus bad. There's no
Correct.
bad way to do this.
Yep.
Too many times I find people overthink it too much,
Yeah.
and they get in their own way. You've been hosting an annual conference called the Digital Fusion Summit. This will be your third year you do that. Tell us about that event, the kind of agenda you build, and who should be attending that event.
Yeah, so the last 2 years that we've put that on, we've had about a $500 billion in the room, between the family offices, high net worth individuals, VCs, and others that were crypto curious, that wanted to understand who the institutional partners and the players were in the space, so they should be looking at them and have a trusted resource for, fund admin or, custody or brokerage or, insurance. We've had all of those people come and speak, and this year will be much larger. We have the last couple years, we've had about 300 people attend both of those. This year, it'll be somewhere between 8 and 10,000 attendees. There'll be, retail clients that are on the higher end that have, again, those high net worth individuals. This year we are going to have an RIA day, where we, educate RIAs on what we do and how to talk to their clients about this. Um, we picked that up from Consensus. We were at Consensus last year and they had a day like that. A couple very good speakers come in there and touch on things. We sit on the digital chamber. We were the only RIA that provided anything in the letter to the SEC on how we wanted to be governed and how advisors should be working with crypto. And they took all of our recommendations, which was really cool to see. We'll continue to foster that event. But if anybody watching this would like to attend, it'll be November 2nd here in Dallas, in 2026. And again, it'll be a couple days. One day will be focused on RIAs, and the other day will be the broader conference, which will have institutional players in the space speak and present on different things.
And I have to add that Jake will also be speaking at our annual crypto conference, Crypto Convergence, in June in Dallas.
Yep.
So we're excited to have you there, Jake, as well.
Thank you.
You actually lead three companies: Digital Ascension Group, Digital Wealth Partners, and Syndicately. Explain the difference between the three of them and why you created all three.
Yeah, so Digital Ascension Group is our holding company. It has the subsidiaries. One of those subsidiaries is Digital Family Office, which we've rebranded to just Digital Ascension Group. But it provides the estate planning and all the counterparties and partnerships to be able to execute on a broader financial scope for your family office. So, tax attorneys, CPAs, other lawyers. And then the wealth management is underneath that. It's a subsidiary. Digital Wealth Partners is the SEC registered RIA that does the institutional custody and all the accounts and management for crypto. And then Syndicately is an end-to-end fund administration platform for SPVs. So many people might remember Assure before they went out of business. A lot of people use Sidecar or Flow or Harmonize or some of the other competitors in the space. We have API integrations to be able to streamline that process so that if you want to spin up an SPV for a private investment, whether that's private equity or real estate or private credit, or you want to syndicate a plane, we have a streamlined way to be able to do that so that the GP can focus on just raising capital and not have to deal with all the back end compliance or admin that eats up a lot of time and usually costs a lot more than what we charge.
So, where are you spending the bulk of your time these days?
Um, High level recruiting and partnerships, vision for the company. I view my job as CEO and principal as providing resources for all of our employees to execute at their highest level. And I try to find people smarter than me to that specialize in whatever we need done at the corporation. And we've done a really good job of that. We've got a really good team. We've scaled to a little over 50 people from 10 people just a year ago. And 2025 was by far our biggest year. We about 10x'd our revenue in 2025. And I think we'll be able to do it again here in 2026 with the partnerships that we're bringing on. Um, I think that we'll become very large, 0 to 1 billion in 1 year, fastest growing RIA in the world. Nobody else that I'm aware of is, our client acquisition somewhere between 5 and 20 people a week that come on, close to 20 to 50 million dollars a week in assets that we aggregate. Um, so that was the main focus of 2025 was the wealth management piece, and then building out the tangential or side services around that for the full private client experience.
It sounds very exciting. Congratulations on your successes to date. We've only got a minute or so left. Give me a takeaway, call to action. What's the walk away message you want to leave with those who are watching this?
Well, educate yourself is probably the highest priority, right? If you don't understand if any of the stuff we talked about, I would, write down keywords and go see what those mean. Just take the time out. But separate of that, again, if you don't have the time to do and allocate to that, work with really good professionals in whatever space or endeavor you're trying to provide for your clients. And if you do need education, we're going to host this event here this year. Obviously, you guys are doing a great job of that for all the advisors out there. So continue to listen to Rick. Get your CE over here or your credits that you need. And yeah, would love to work with people if there's an interest or answer questions. We just want to provide value for everybody out there in the ecosystem, whether that is our clients or people that need the management of these assets or the asset managers that want to do that for their clients as well.
We have posted in the chat here on Zoom the link to the Digital Ascension group. So you can go directly to both the PDF of the info sheet about the company as well as the direct link to their website. So it's available to you right there in the chat. This has really been terrific info, Jake. I really appreciate it. And I know you're going to be getting, I think, quite a bit of inquiries, a number of inquiries from folks as a result of today's conversation. I want to tell you that next month is our next webinar, Thursday, February 12th, investing in stable coins and tackling tokenization. That's February 12th at 2 p.m. It's going to be a really terrific event. I hope you'll join us. If you haven't read my white papers, number one, the 6 myths that are preventing you from buying Bitcoin, and second, the death of the 60-40 portfolio and why you need to have 10 to 40% in crypto, which Jake will argue is way too low a percentage.
Personally, I would, yeah. For a client,
And
yeah, I think that's probably fair.
well, I'm glad you think so, Jake. If you really want to become proficient in this subject, become certified in blockchain and digital assets. Obtain your CBDA professional designation so that you can show your clients that you are staying current with the latest trends technologically and from an investment management perspective. An online self-study course, up to 18 CE credits that'll give you the information you need to be able to effectively counsel your clients. And as I mentioned, our Crypto Convergence Conference, June 8 to 10 in Dallas. Jake will be there. It's a tremendous lineup of speakers. The only event of its kind designed for financial advisors. There's the QR code for you to learn more and register for that event. If you haven't read my #1 bestseller, The Truth About Crypto, it's available from your favorite bookseller. And you can sign up for our monthly e-newsletter on digital assets, giving you the latest and greatest on what's going on in the field. And a total change of topic, my brand new book, The Truth About College, which has already debuted as a #1 bestseller on Amazon. If you want your teen to graduate from college in 4 years, debt-free, on the dean's list, ready to get into a career they're really going to enjoy, pick up a copy of The Truth About College. Again, I want to say thank you, Jake, for our conversation today. Really terrific info, and I appreciate your being with us here today.
Absolutely. Thank you for having me, Rick.
Thanks, everybody. We'll see you again soon. Have a great day.